Well, I mean, I think low regulation, low tax, pro-innovation policies give people, especially specifically with regard to digital assets, if we have a digital assets framework that supports digital commodities, digital securities, digital tokens, digital ABTs, digital currencies, digital NFTs, so that people can innovate in the United States of America and spread those assets everywhere in the world, I think that'll be good for the world and good for the United States.
Michael, I'm curious because we've talked to some of your peers in the crypto industry who have talked about maybe some of the friction at times that they have felt when they've been trying to buy crypto assets under the existing regime, under Gary Gensler at the SEC, for example. You guys have obviously accumulated an awful lot of Bitcoin at MicroStrategy. Has there ever been that kind of friction? Have you seen those regulatory obstacles to what you've been doing?
Well, I think Bitcoin is the one digital asset that has the most regulatory clarity in the world because there's general universal consensus that it's a digital commodity. The friction on Bitcoin has been slow approval of the ETFs, the inability to do cash create and redemption, the slow approval of the options market on the ETFs, and resistance to banks custodying and handling Bitcoin. So that's held back the asset class. I think that a favorable crypto regime will accelerate the development of Bitcoin. And I think on the digital asset side, right, just the lack of a digital assets framework for digital currencies and digital exchanges and digital tokens has put that industry in limbo. And I think we're looking for those things to be resolved with the incoming administration, and that should accelerate growth for everybody.
And Michael, this week on the show, we did speak to Senator Kirsten Gillibrand. And I asked her, Michael, specifically about this idea of a Bitcoin strategic reserve. Listen to her response here.
I don't know what the purpose of a Bitcoin central reserve is, and I haven't really seen the details of any idea about why you would do that and why that's important. I think it would have an obvious impact of supporting the Bitcoin industry, which in and of itself isn't good or bad. I just would want to know what the reason is.
All right, Michael, so the senator not sure about the reason for it. What do you say to that? What's your response?
Bitcoin is emerging as the world's reserve capital network. If you want to store your capital for the long term and you live in Africa or Russia or China or South America or even the US, your choice is local real estate or local stocks or Bitcoin. Well, people are realizing that Bitcoin is better than real estate. It's better than stocks. There's not a single company or real estate property in Africa that you would rather own for the long term than Bitcoin. So the very simple idea is buy 20 or 25% of the Bitcoin network on behalf of the US government, catalyze the development of that world reserve capital network, and then let all the Chinese and the Russians and the foreigners sell all their other assets and buy Bitcoin, and then the money flows into the United States. If you want to put a great twist on it, dump your gold, sell all the US gold, buy Bitcoin, then the trade is free because you could buy 5 million Bitcoin for the cost of the gold. You will demonetize the entire gold asset class, and our enemies hold gold in their banks, so their assets would go to zero. Our assets would go to $100 trillion, and we would control the world's reserve capital network as well as the world's reserve currency network.
President Donald Trump has sent shockwaves across the crypto world by announcing the creation of a strategic crypto reserve for the United States. The reserve isn't just about Bitcoin and Ethereum. That's old news. This latest strategic endeavor also includes rising stars such as XRP, Solana's SOL token, and Cardano's ADA. Promising to elevate the industry from years of corrupt attacks, Trump declared his commitment to establish the U.S. as the premier crypto capital of the world. Welcome back to Investocracy Crypto.
As usual, you're painting a grand and vivid picture, Michael, with this kind of stuff. I know your long-term price targets are sort of almost infinite. Let's talk shorter term, and let's assume that the Bitcoin reserve doesn't happen, right? Let's assume that conditions continue as they are. Where do you see Bitcoin at the end of 2025?
You know, I don't chart it month by month, but I noticed that it's been a 60% ARR for the past 4 years and even before that point. And my model is generally that it will grow at 60% ARR, decelerating to 20% ARR over 21 years. So if you start to crank in 60%, then 58, then 56, then 54, and you put that on a scale, absent the cyclical volatility, you get to a forecast which makes sense.
Michael, quick question on that cyclical volatility, right? Because typically Bitcoin does move in these 4-year cycles, and there is a sharp pullback typically. Is that anywhere in sight, and what would be a potential catalyst for that?
I think as the asset grows and matures, the volatility decreases, and those the extremes of the drawdown decrease. The structure of the market determines the volatility, and so if you're going to forecast the structure of the market, you can't look backwards. It's like if you looked at a bicycle 4 years ago, and I show up with a motorcycle right now, it's a different set of physics. The market right now is driven by the ETFs, driven by the options market, driven by companies like MicroStrategy, driven by the global adoption. So I think what you'll see is you will still see volatility, but you won't see the extreme drawdowns of the last cycle. You'll see a more gentle volatility. It'll surge up, it'll come back, but I don't expect we saw an 80% drawdown in the depth of the crypto winter from 66,000 to 16,000. In order for that to happen, you had to have a bunch of very poorly capitalized companies like FTX and Genesis and Celsius and BlockFi force liquidate. We don't have those kind of companies in the system now. The capital structures of the companies participating in the market today are much deeper, much more robust, and there's a lot more equity capital today. So you'll see a different dynamic. I think it'll be muted to the upside and the downside because of the options traders that are moderating the market.
The announcement of the U.S. crypto reserve ignited a firestorm of activity. Market players watched in awe as XRP rocketed 33%, Solana's SOL leaped 25%, and Cardano's ADA soared over 60%. Even Bitcoin and Ether, which were in a momentary slump, caught the updraft, showing significant gains. This comes after Trump's executive order on digital assets directed a presidential working group to explore further avenues for a crypto strategic reserve.
Here's a leverage play on SWI, which is deep book, which is the liquidity layer for SWI. So the more, if you think of like the Jupiter idea, the more activity that happens on SWI, the more deep book is likely to go up. And it's like $180 million right now as an entire value. Now, if we're right about SWI, that it gets into the top 10 and potentially the top 5 in this cycle, well, the liquidity layer is going to be extremely valuable. So, there could potentially, and it's not a recommendation, but it could do a 10x. So this is how I'm saying there are ways of having leverage plays on top. Okay, let's go back to the liquidity story. So the liquidity story here is, oh my God, and I've been sent this chart 1,000 times by people. Oh my God, what happens? Is it all over? Is this the peak? Is this the end? Do we get out now? What happens? What happens? Panic, 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 bullshit. Okay, we had exactly the same thing last time Trump was elected. The dollar was strong, rates went up, liquidity contracted, the market had a big rally, which is Bitcoin. And then in January, because of the lag, what we found was a sharp 27% correction in Bitcoin. And then it ripped higher. Ripped higher so much, in fact, that it went up 23x. Now, I'm not expecting that because this was a much earlier cycle. But what we're saying is that correction is not to fear. That correction is just a marker point from phase 1 of the banana zone to phase 2 of the banana zone. Phase 2 of the banana zone usually goes into US tax season, which is like April. Then there's usually a consolidation because people have to sell tokens to pay taxes. And then there's usually phase 3 of the banana zone is the rip into year end. And that's all driven by the liquidity cycle.
Some in the crypto community cheered at the inclusion of a mix of coins. It wasn't just about Bitcoin and Ether anymore, but a diversified investment with rising tokens like XRP, SOL, and ADA all vying for attention. Others feared future administrations might undo it all, cashing in the crypto reserve to fill social security coffers or tackle other fiscal obligations. Adam Blumberg from Enclave Group voiced the concern that owning a decentralized asset like Bitcoin seems now eerily centralized under government oversight. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So we've done that. We've corrected the breakout. Now, global M2 is actually driven by the strength of the dollar. Now, the dollar has started to weaken. We expect it to weaken going forwards, and that will then reignite the next phase of the banana zone as we start bouncing higher. You can see those corrections in M2 were short. Now, the reason being is we've got to roll all of this global liquidity. We've got massive amounts of debt to roll over, and you need liquidity to do it. So that is the game, the big game, the everything code game that I've talked to you about. So the everything code game is very much at play. This is a phase, the early phase of the breakout. This year is the year of liquidity, and that's why the year ahead. And that's why the banana zone plays out so beautifully. So we talked about global M2 being driven by the dollar.
Could this be the best time to invest? The crypto markets are as unpredictable as ever, but with the US government's move to create a forward-facing crypto reserve, there's a sense of validation for these digital currencies. Cardano's ADA, XRP, and Solana, having seen impressive gains, look particularly promising. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.